Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into the Wall Street Journal's August 1st, 2025 edition. We'll be digging into corporate performance, some shifts in trade policy, and, the big questions shaping the economic road ahead. So kicking things off with corporate results, the tech sector is still looking very strong. Apple, for instance. Their June quarter iPhone sales were better than expected, pushed revenue up 10%. And Microsoft, it hit a $4 trillion market cap.
Right.
Really fueled by cloud and AI, right? Azure reported over $75 billion in annual revenue. That's quite something.
It really is. And it reflects that deep market belief in their AI strategy, for the long term. But what's also interesting, I think, is the wider market picture. Take Figma.
Ah, the IPO.
Exactly. Its debut saw the stock jump 250%, hit a $47 billion valuation. That really signals a healthier U.S. IPO market, maybe some renewed confidence there.
Definitely feels like it.
But even the giants aren't immune to pressure. Look at Amazon. They had solid growth, 13% revenue, 35% profit increase. Good numbers. But the stock dropped about 7% after hours, mostly because their cloud growth, AWS, was 17.5%, which sounds okay, but it lags rivals like Google at 32% and Microsoft at 39%.
Context is key there. The bar is set incredibly high.
It absolutely is.
And it wasn't just tech delivering, right?
No, exactly. CVS Health beat earnings, and they actually raised their outlook for 2025. Seems their insurance business is bouncing back.
Okay.
And Comcast had a solid second quarter, too. They slowed the losses in broadband and video customers. Plus, theme parks saw an almost 19% revenue jump, thanks to the new Epic Universe park.
Right, that park's making waves. Okay, so shifting gears a bit, let's talk about the global picture, specifically trade and tariffs. This seems like a major developing story.
It really is. President Trump signed an executive order set to take effect August 7th. It aims to raise tariffs on, pretty much all U.S. trading partners.
Wow, nearly all. That's broad. What's the immediate impact been?
We're seeing significant costs reported by automakers already for Q2. Ford mentioned $800 million. GM, $1.1 billion.
$1 billion. Wow.
Stellantis, $350 million. And Tesla reported $200 million. These are substantial hits.
Yeah, those aren't small numbers. They must be rethinking operations, maybe pricing too.
Definitely. And it's already facing legal challenges.
Oh, how so?
Well, appeals judges are questioning the administration's use of those 1977 emergency powers.
Right. That's usually for national security crises, isn't it?
Exactly. So using it for widespread tariffs is raising questions about potential overreach. Looks like a legal fight is brewing.
Okay. And what about the wider global effects beyond the U.S.?
Well, the impact on developing nations is becoming clearer. These trade shifts are, in some cases, reversing economic gains. Take Indonesia, for example. They're now getting a flood of cheaper Chinese goods that were originally headed for the U.S. but got redirected because of tariffs.
Ah, so it undercuts local producers.
Severely. It's hitting local manufacturing hard, pushing some factories out of business. It just highlights how interconnected everything is.
It certainly does. So bringing it back to the markets, given all this, one huge factor seems to be AI investment. What are the strategic implications of just the sheer amount of capital pouring into AI from the tech giants? How's that shaping valuations for you, the investor?
You're right. The capital expenditure is, staggering. Microsoft, for example, is projecting $30 billion just for the current quarter.
30.
Yeah. And that definitely fuels their valuations. It signals dominance, technological edge. But, the return on investment isn't always clear-cut, especially for consumer platforms. Look at Meta. Their AI expenses could apparently triple to $150 billion by 2026.
Wow.
But unlike enterprise AI with clear business-to-business models, consumer AI relies heavily on user adoption, navigating regulations. It's a different bet. Big spending doesn't automatically mean big immediate returns for shareholders there.
That makes sense. It's a longer game, perhaps riskier too. And thinking about these big forces, tech investment, trade shifts, it makes you wonder about the fundamentals, like monetary policy. What core questions are emerging about the Federal Reserve's mandate, its whole way of operating, given these economic changes?
Well, the discussions are pretty fundamental. People are reevaluating that long-standing 2% inflation target. Is it still right? They're also looking at how best to restore price levels after the recent inflation spikes, what tools actually work, and also reassessing quantitative easing. The Fed buying bonds, its role, its effectiveness.
So it sounds like potentially a major rethink of how the Fed defines price stability and employment.
It could be. These questions suggest we might see a shift in their basic approach, which of course has huge implications for the entire economy.
Absolutely. Okay, one last area. Beyond stocks and bonds, where else is capital flowing? Are we seeing trends in alternative investments,
Yes, definitely. There's a clear move by investment firms into private markets.
like private equity or other things?
Other things, too. A good example is Wisdom Tree buying Ceres Partners. They specialize in farmland investment.
Farmland. Interesting. Why?
Well, farmland is seen as offering equity-like returns, but with much lower volatility. And crucially, its performance isn't really correlated with traditional stocks and bonds. It's seen as a hedge.
Ah, diversification. Makes sense.
Exactly. And it fits with this broader push to get more private market assets into places like retirement plans, offering a different kind of stability, especially when markets feel volatile or inflation is a concern.
Provides a bit of an anchor, perhaps.
Precisely.
Okay, that brings us to the end of this deep dive. We've covered the latest on earnings, some critical shifts in global trade, and these really fundamental questions emerging in finance and investment strategy. Really encourage you to think about how these interconnected forces might influence your own approach as you navigate, well, what continues to be a pretty complex economic environment.